So panic in the markets after a big sell-off as people are questioning whether to buy, sell, whether we've bottomed or we're going to continue lower. In this video, I'm going to be going over how to spot trend reversals to give you more confidence about when to enter the market and when to hold off. So let's get into it. So first of all, let's start with how to identify a trend. Now, price is typically in one of three environments. You're either in an uptrend, a downtrend, or a sideways consolidation range-bound environment. And the way to identify which one is by using chart structure. So an uptrend is defined by price making higher highs and higher lows. So if we take a look at the most recent example, so back in October, you can see we made these lows here at 60k, and we then did not make any lower lows in terms of a candle closure. We then went up and continued to make higher lows. So each low again remained unbroken and was higher than the previous low. And whilst we were doing that, we were also making higher highs. So each time we made a high, it was higher than the previous level of resistance. Turn the magnet tool off, that'd be easier. There you go. As you can see, higher highs all the way, and that trend continued from that level of 60k all the way up to 108k, where we then did not make any higher highs in terms of a candle closure. We did get that wick on the 20th of Jan up to about 108. However, we didn't get any candle closures above the previous highs. We then went into a downtrend, which is where we currently find ourselves, which is defined as the opposite, obviously making lower highs and lower lows. So if we take a look, we did not make any higher highs from the previous one. So every time we put in a high, they were lower than the previous ones without any candle closures above. We did get quite close to attempting to make a higher high here back from the 20th of March. You can see lots of wicks into this level of resistance, 87.5k. However, no candle closures above, so therefore we did not make a higher high. We continued with this trend of lower highs, including the most local one here at 82.5k. And of course, whilst we were doing that, we were making lower highs as well, lower lows, sorry. So every time we made a low, it was lower than the previous ones as well. So this can be seen on any chart, any time frame. So for example, Ethereum is exactly the same, no different. You can see highs, lower high, lower high, lower high, lower high, all the way down, and also making lower lows as well. Now, another way to identify whether we're in an uptrend or a downtrend that I like to use is the moving average 21. So what you can see with these examples here on Bitcoin is you can see that once we started, you can see we're in a sideways range-bound environment all the way through sort of June, all the way until October. However, once we reclaimed the moving average and started to not close below it, so you can see, we chopped up and down, closing above, closing below, all through this time period here. However, once we started remaining above the moving average 21, starting at the 12th, 13th of October, and no candle closes below it, a very slight one there, but still remaining above the moving average 21, then you're clearly in an uptrend, because that is also working alongside making those higher lows. And the same can be said in the opposite. When you're in a downtrend, you can see that all the while we've been in this downtrend, we have been unable to get and hold above the moving average 21. We've had a couple of deviations, as you can see, single candle closures above, but then straight back below. Again, going back to that period of trying to make a higher high during the 24th to the 27th of March, we had these couple of candle closures above the moving average 21. However, we didn't sustain it. We then dropped below, another deviation. As you can see, another struggle and fail to get above the moving average 21 more recently at the beginning of April as well. So you've got the moving average 21, you've got chart structure, and the third way to identify or help identify whether you're in an uptrend or a downtrend is the RSI. Now, typically, if you're in an uptrend, you're going to be trending above the RSI 50, and if you're in a downtrend, you're going to be trending below the RSI 50. So being above the RSI 50 is usually a good indicator of market strength, and you can see that if we take a look back in October, again, very choppy area between sort of June and October. However, once we got above the move at the RSI 50 and started trending above it, we got above it here back on the 11th, 12th of October, and we remained above it all the way up until the top here at around the 19th, 20th of December, when we reached our peak of 108. So all this time period here, we're above the RSI 50, and you can see we're trending up very nicely. The opposite can obviously be said for when we got back below the RSI 50 here on the 3rd of Feb. You can see that we closed below the RSI 50, it held as resistance, and since then we've been in a downtrend, and we've also remained below the RSI 50 with a couple of tests of resistance as well, including this again, that small period of time, those couple of days where we didn't break above, we couldn't make higher highs, we were only above the moving average 21 for a couple of days, and we're only above the RSI 50 for a couple of days. We broke back below both the moving average 21 and the RSI 50 and failed to make a higher high. So you can see all those clues there that we are clearly in a downtrend and still in a downtrend. Now, this is the daily time frame, which I personally think is the best for identifying trends for the bigger picture. You can go down onto the lower time frame, such as the 4-hour. That's probably better for trading, but as you can see, you're going to get a lot of false signals, and it's not really the best if you're looking for those long-term trends, as you can see. And you can also look at things on the weekly, the same examples or the same clues that we were talking about before about lower highs and lower lows in a downtrend. So as you can see, for this downtrend, didn't make any higher highs when we were up here at 104k. We then came down, made a lower low, and then made a lower high, so indicating we are in that downtrend. Also, if we take a look at the RSI 50 on the weekly time frame, you can see that BTC hasn't been trending below the RSI 50 since the bear market. We've had a couple of examples where we've crept below it. So the last time we trended below the RSI 50 was back here in April of 2022. You can see that trend all the way down to the RSI lows of 21. However, since then, we've only had a couple of visits below. We had a brief spell here during August, September 2023, where we spent a couple of weeks below it, but then popped back up. And you can see that reclaim, we then went on to a nice run. Again, we had a couple of tests of the RSI 50 as support back here in July and August of 2024. And again, another brief visit below it in September before getting back above it and then continuing that uptrend. Now, more recently, we went below it here in March. We've now come back up and retested as resistance. So we didn't come back above it and reclaim and continue the uptrend like we had in the previous examples of October and September. This time we've rejected it and we've started to trend below it. Now, of course, the only disadvantage with these higher timeframes is that you're going to be getting in and out quite late. However, you can see that the trend is very strong once it confirms on those higher timeframes. So there is a chance that this trend is now going to continue further to the downside because, as I say, we have made that lower high on the higher time frame in the weekly. We've rejected the moving average 21 and we are starting to trend below the RSI 50 on the weekly time frame rather than dip below it and pop back above it. So keep that in mind. Now, let's go over how we spot a trend reversal. So back on the daily time frame then, and how we identify a trend reversal is simply by recognizing the change of character on the charts and the price structure. So if we take a look at our current example, we currently have a level of support here at 78.2k. So you can see we've had a couple of wicks below this level of support. However, no daily candle closes below it just yet. So what you're looking for in a trend reversal is similar to what we had back in October, where you have the local lows. As long as you don't have any daily candle closes below those local lows, you are then no longer making lower lows. So that is the end potentially of the downtrend. So then you can start a potential uptrend. So no more lower lows. Your then next objective is to see if we can start to make higher highs. So the most recent start of the leg down or the local high here is 84.2k. So what we're looking for here is a potential run up break of these most recent highs to make a higher high and then potentially come down and hold this level, retest this level of support to then make a higher low. So then you would have made no more lower lows. So the downtrend is finished. You've started to make higher highs and higher lows, which is of course the start of an uptrend. And then that should coincide quite nicely with the other indicator we've got. So we've got the EMA 21, which is actually in and around that level anyway. So a break above that level would be a break above the EMA 21. And then the final indicator or the final confirmation would be a break and hold above the RSI 50. Now, we have, of course, had that scenario before. So the nice thing about using these indicators as confluence is that they can also be used as your invalidation. So as we've seen last week, so we held the lows back here on the 10th and 11th of March. We didn't manage to make, so we stopped making lower lows. However, we did not make any higher highs. So the most recent start of the leg down was 92.8. So that was the highs that we needed to get to, obviously pretty far away. Instead, we made some more local highs here at 87.4, which we talked about before, which we did not manage to break above. We also, if we just grab our paintbrush tool here, so we didn't make any higher highs. We also didn't manage to maintain above the EMA 21 for longer than a few days, or the RSI 50 either. So again, what you could have done there with your invalidation, if you'd have said to yourself, okay, we're above the moving average 21, we're above the RSI 50, we're potentially going to make new highs here if we get a daily close above 87.87k, you could have potentially entered your long here with your invalidation being a daily candle close below the moving average 21 and below the RSI 50, which if you did, it would have got you out and you wouldn't have suffered this most recent leg down. So that is the nice thing about not just using price structure by itself, but also using the EMA 21 and the RSI 50. So drop in the comments below what indicators you use to identify a change in market structure or a change in trend. And also, do you think that BTC has bottomed, or do you think we've got another leg down to come? Let us know in the comments below. Like and subscribe, and I'll see you on the next one.